The first is 2-session up close, and the view is typically with the daily and 4-hour institutional order flow should be bullish. The morning trend, or the AM session, typically we'll see a return to a discount array, and then price will rally. The lunch hour consolidates with shallow retracements, and the PM trend runs the lunch hour lows, sell stops, or drops into a fair value discount array, then rallies into the close. Now, a little bit about this specific projected range. The daily range could actually go straight through the lunch hour with very little consolidation whatsoever. Depending upon what was the catalyst that sent prices higher, it could be a very strong economic or a surprise to economic news that was released early on. And while we're looking for basically a measured move type event, first leg up in the morning consolidation and a second leg of equal distance seen from the AM session, seen in the afternoon session, don't be lulled into thinking that if it's a strong bull day, that it will consolidate always the entire lunch hour. Many times it can just continuously trade higher through the lunch hour. I'm just giving you a general, kind of like a generic view of how I interpret the price action, how I forecast it, how I think it may unfold. Obviously, nothing's guaranteed, nothing's set in stone, but by far and large, these 8 ways of projecting the range that I'm going to show you in this teaching will pretty much fit the bill on most days. So the first one we're going to look at is 2-session up close. And when we look for the AM trend to return down to a discount array, what we're actually looking for is we're looking for an index SMT divergence on the lows. And we're going to be comparing the lows from the London session into the 9:30 a.m. The AM session is usually going to reach up into a expansion move. It can be a higher time frame PDA, but generally you want to be holding out for time of day, which is 10:30 to 11 o'clock in the morning, typically as we understand it in Forex as the London close. But we want to be holding on to it with the idea that it's going to expand going into the lunch hour. Now, when we get into the lunch hour, it can go in consolidation. And again, we can be looking for a retracement back down below the lows formed in lunch, or we could be returning back to a fair value gap or bullish order block seen inside of the lunch hour. At the lows that's formed in the lunch hour and the low that forms immediately after 1 o'clock New York time, those lows are going to be compared against the 2 other averages. So when we look at the S&P, we're looking at the Dow and the NASDAQ, and we're going to be comparing lows at these specific price points. There's no ambiguity here. It's highly specific. We're going to be looking for the indice to diverge. One of them. It doesn't have to be the E-mini S&P. If the NASDAQ fails to go lower, that in itself supports the idea that the S&P should rally and go higher. And again, as we go into the later portions of the day, going into the close, we're going to be relying on time of day as well as we did with the AM session. Now, when I mean relying on time of day, we have to do what we can to hold for time. Remember, the day is going to expand as we get closer to the closing price or closing hour. We want to get the maximum amount of daily range in our favor. So if we're long or trying to get long in AM or the PM session, it's most beneficial when we're holding for the maximum potential range that can fulfill in a daily candle. So if we're looking at the E-mini S&P and we see bullishness underway and we're long, and it's only 2 o'clock in the afternoon, we've seen some handles in our favor, or in other words, paper profit. Don't be aggressive about trying to take those profits off the table, because you want to allow the time of day to come to a higher level of delivery on price, which obviously will lend well to you getting a higher profit. the more you hold towards the close, the more opportunity there is for you to make more of a range. The AM session and the PM session highs initially are going to be most likely a 15-minute or a 60-minute PD array. Now, since we're looking at a 2-session up close, both the AM session and PM session PD array is going to be a premium array. Now, again, it could be a 15-minute premium array or a 60-minute premium array, but you're aiming for that for both sessions. Now, if you notice how I have the diagram on the PM session, going into the close, it could be 2 stages. It could fall short of a 15 or 60-minute PD array and start to retrace. Look for an additional ramp up that last hour going into the close until it reaches the 15 or 60-minute PD array or premium array. Okay, 2-session down close, just as the opposite of what we just shown. Institutional order flow will be bearish on the daily and or 4-hour chart. The AM trend will return to a premium array, then declines. The lunch hour consolidates with shallow retracements. And the PM trend runs the lunch hour highs for buy stops or rises into a fair value premium array, then declines into the close. Much like we just said as it relates to strong up days, the lunch hour may not see the entire lunch hour consolidate. It can actually trade through the lunch hour going lower, depending upon, again, whatever the stimulus was that set the day off. It could be a very strong economic news was expected to come out and it disappointed. The number was a disappointment, and it could have been a strong disappointment. So therefore, the market's going to discount current levels and just rapidly reprice lower. The impact of seeing these types of days, obviously, this is like a trending day. You want to be focusing on when the daily and 4-hour are bearish, and opposite seen with up 2-session up close days. You want to see when the daily and 4-hour is institutionally bullish. If we are in the middle of a intermediate term or long-term price swing based on what we would see on the higher time frame chart, this is the classic scenario. Now, when we start approaching higher time frame 4-hour and daily opposing arrays, in this instance here, we would be looking for a 2-session down close or basically a big down day. That down close is high probability until we get to a 4-hour or a daily or weekly discount array. So when it starts trading into those levels, obviously the same thing is said in opposite terms for the 2-session up close. If we're trading in the middle of a swing or intermediate term price swing has yet to complete, and we have not traded up into a 4-hour daily premium array, that scenario should unfold for a 2-session up close day. For a 2-session down close day, this is the criteria we're looking for as long as the 4-hour and or daily discount arrays have not been traded to. So it makes it very easy for the price to expand. Okay, we're looking at the 2-session down close. Again, in the morning, when we see price return to a premium array, at that moment, we're going to be comparing the other 2 indices, the NASDAQ and the Dow, and we're going to be comparing the highs for index SMT, again from London into the 9:30 opening equities, and we're going to be holding till 10:30 to 11 o'clock in the morning, relying on time of day to get them a maximum amount of range. As we get closer to 11 o'clock, there's more likelihood of a consolidation or pause going into the lunch hour at noon. And during the lunch, we're going to be looking at the highs comparable with the NASDAQ and the Dow futures against the S&P. And again, this can be a return back to a fair value gap or a bearish order block or closing of liquidity void and then go lower. Or you could run the lunch high for buy stops and then reject. But you're looking at the highs during the lunch hour and you're looking at the high that forms post New York lunch. When that happens and it forms, there's always going to be some measure of a short-term high that forms immediately after the lunch. And if you're looking for a 2-session down close profile to unfold, projecting that daily range, we're going to be looking for weakness immediately after the lunch hour closes. So from 1 o'clock in the afternoon, New York time, we're immediately going to be hunting and stalking the E-mini S&P's short-term high. So if the price was rallying up, we're going to be looking for reasons to suspect a fair value play for return to fair value for selling short at a bearish order block, fair value gap, or liquidity void, or a run above or a move above the New York lunch. In the PM session, again, we have to rely on time of day. Don't just take a couple handles of profit. Hold on to it. Head towards the close. At least try to hold on to it until 3 p.m. bond close. And if you can do all that you can to hold on to it into 4 o'clock, it's ideal to do that. The AM session and the PM session intraday lows, again, are going to be many times lined up with a 15 to 60 minute PD array. And since we're looking at a 2-session down close projected range, it's going to be a 15 to 60 minute discount array. Now in the PM session, again, that many times can happen as a 2-stage short-term rally where early profit will be taken. If it does not do that short-term bounce at a logical 15 or 60 minute discount array, hold for it to break another leg lower going into the close, and then that later point at which it trades lower many times will trade into that 15 or 60 minute discount array.